your charting. Are you guys good with the charting?
Hell no.
Hell no. What you mean?
Are you asking? Can we read that stuff right now? I can't. A little, a little bit, a little bit, a little bit, a little bit.
Where are you struggling at? Charting is easy. Where are you struggling at? Let me give y'all some game. I'm gonna try and see if I can make this Zoom very valuable.
I think one question for me is like, what specific time period should we be looking at? Should we just start with the day, then go within that hour, or do we look at a month? Like, where's that concept coming from in terms of looking at the times?
Good question. I got you. Say less. I prepared for this. So, okay. So STZ, for example. So we're looking at STZ, right? The first and foremost, we dealing with options. But before your options play could become profitable, you need to understand the charting, right? The candlesticks, where the support is, where resistance is, and certain patterns. If you see those patterns, then if it's forming at a demand zone, which will be support, like a support level, aka demand zone. You buy at demand, you sell at supply, right? You need to first establish your level. So the first thing you do, and this is answering your question specifically. So what I do is I'll go to my intervals, right? And then I'll start off with, say, a monthly chart, because it's a top-down approach. So you want to start from the highest time frame and then go down to the lowest time frame. So if you start on the higher time frame, I mean, not the highest, because if you look at the time frames, it goes as high as 12 months. So if I switch it to 12 months, each candlestick takes a whole year to form. But you see how it looks like. If you are swing trading, day trading, swing trading or day trading, you don't want to use a 12-month chart to make your decision, right? You can use it to establish where your levels are, but you don't want to use it to execute, get in a trade, or get out, because it's way too large of a time frame compared to what you are doing. We are trading short term, so you don't want to necessarily use that to enter a trade. However, you can use the higher time frames to establish, important levels in the market. So like right here is an important level in the market. And I'm still answering your question. So start from a higher time frame and then draw your lines or your levels based on where price has pivoted, right? So this is an 8-month chart. So 8 months, I'll go down to 6 months, right? It doesn't change much. Let me go down to 3 months. 3 months, it's not changing much, right? Because the levels on the 6-month or 12-month is still solid. Also, what you want to do is, when you're establishing your levels, use a line chart, because a line chart will give you more clarity on the levels. So you see, once I switched it, now I can see points where the market connected, right? When I say connected, this level right here and this level here. Let me see if I can draw. How do you draw? Brush, highlight. Okay, let me highlight. Like right here. Oh, right here and right here. Y'all see that? How do I, why is this thing just clicking? I don't need you there no more. But like right here and right here, it connected. Okay. So that's what you're looking for. So now let's go to 1 month. I'm still answering your question specifically. So 1 month, right? 1 month, is there a level where the price connected? Yes. Like
What you mean
right.
when you say, sorry, Block? What you mean when you say the price connected?
Okay, so levels where it bounced. So you
Okay.
see the pivot, you see the pivot points, like right here,
So you
right
talking about that
here.
pointy end? Okay,
Yeah,
I'm with you. I'm
like
with
where
you.
it comes and it bounces. So
Got it.
look at it intersects. So let me draw this line here and I'll give you more clarity on what I'm trying to say. So look at all the points like right here, right here, right here, right here. There's a level where when I switch it to a candlestick, you'll see what I mean. But it's doing this. It's doing this. So price goes up, right? And it comes down. You see right there, it bounces up. So that's what you're trying to find, like levels where the price bounces. And those are the levels where you want to buy from, because that makes it a demand zone. A demand zone is also support, right? Support is where people tend to buy, price tends to bounce. So support is a floor. And that's where you want to get in at, because you get a discount when you buy at, oh, what the hell? When you buy at those levels, right? So you buy here and run it up.
So
And
just to
then if
give you
it's,
some, just so I'm clear, so that point, that little bout, that low point is like where Nike was the other day, where it went down. So now we're trying to get it where we got in, and then now we're gonna wait until they go up again, right?
we're gonna buy it to go up. So
Yes,
good.
that's what I mean. But we bought it when it
Switch
was
to Nike.
low.
So look at my Nike chart. So you see what I've done? These are my levels, and these levels is already established from like an eight month chart. So you see there's a point here. This is actually a good example. Let's use something. So highlight. So boom, 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 boom. No, that didn't hit where I wanted it to hit. Boom, 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 boom. And because there's a boom here, I'm expecting a boom here. You get it? And this is a monthly level. So imagine back here, 2003, Nike went up to 62, came down to this level. If you bought from this level, you made so much money, right? Or you let it go, let it come back down, correct itself. So once it corrects itself, you only want to buy from a demand zone. And you want that zone to be a zone that you've already established before you get in the trade, because that makes it objective when you're doing it when there's no money on the line. You don't want to get into a trade and then once you're in the trade, you try to find levels that are going to support why you got in the trade. No, you establish your levels first. And then you say, if price comes to this level, I'm going to buy. If it doesn't come to this level, I'm not buying, because that's the level that gives you the highest probability of winning, right? And it gives you the highest discount because you want to buy low and sell high. So for Nike, what we are expecting is for it to do something like this. Either go from here to 80, 83, come back down, or break 83 and eventually do this. Nike would eventually do this. You see what I'm saying? It may eventually do this. But, you know, nobody knows how long it's going to take. That may take 5 years, 10 years, 2 years, who knows? So we are just playing it one day at a time. And for now, if it does go up, it's going to face resistance at 82. That is not certain. It's likely to face resistance at 82, right? But anything can happen in the market. So you don't want to speak in like, be so definitive with what you're saying, because anything, it can break through and you're going to be like, oh shit, I thought it was going to bounce. But there's a high probability that from 75, if it does go up, it will face some sort of ceiling at 82. And so if you buy, 82 will likely be the level where you want to take some profits, because it can go to 82, right? Do something like this and then get pushed back down. Get pushed back down either to that trend line and eventually go back up and break up, right? Or it can break down. And if it breaks down, it's likely going to go to 64, which would even be a better discount. Actually, this is good. That was a good good chart to use. Does that make sense?
I'm clear. I'm good. Thank you.
Good. Yeah. So only buy from these levels. Only these levels. Buy or sell from here, where you see commonalities, right? Like, okay, price came here. And mind you, this is a monthly chart. So if we go down to, let's say, the daily, now it's gonna be more clear. So you establish your levels on a higher time frame using a line graph. Then once your levels are established, you can switch it to the candlestick so you can get more details, right? More defined details. So on the daily, you're not going to see much because Nike gapped down from 94 all the way down here. So if you want even more details, now you got to go down to, let's say, 10 minute. And the 10 minute is going to give you detail, right? Detail. So the 10 minute, if we were trading this level here, I mean, if we were trading this chart, this time frame, we could have made money on Nike, right? Because you could have bought here when it came down here, 75 to 75, 75. That's money, depending on what contracts you buy. Wait for it to come back down here, came to 74 something, jumped to 75.45. right? If you are like day trading. But I'm not a day trader, so I'm not interested in those little fluctuations. I'm trying to buy, give it time to come all the way up here or fill the gap all the way at 94. And that is going to take time. That is not going to happen within a day or two or a week or 2 weeks. That is why you give yourself enough time for that to happen. And that's where the expiration comes in. The expiration doesn't mean, the expiration just gives you peace of mind. So if you give yourself 2 years for Nike to hit 85 or 80, it's more likely to happen than if you have an expiration of 2 weeks from now and you're like, yeah, 94 strike on Nike. That ain't gonna happen.
You know, that's what I realized. That we do. I'm sitting a lot of cash into these deals. That's what I realized last week on Friday. And so, is there a good strategy so we won't get a lot of our capital tied into things and still be moving?
What do you mean? Can you
Because, like,
rephrase
for
that?
example, we did PayPal. So I got money sitting in PayPal. Got money sitting. Everything we did last week. Um, and that's just sitting there. You know what I mean? Like on the trade. So I'm just
Right.
going to just keep putting it in. Is it like a strategy until I make, or I'm just have to just keep putting it
Oh,
in until I make
okay.
something, then pull out. Do
So
you get what I'm
PayPal,
saying? Because right now I'm just putting in with long term expiration date.
yeah, okay. So here's the thing. So with PayPal, Dell, and Palantir, those are supposed to be on one account. So the goal is you're supposed to have different accounts
Hmm,
at
I
different.
do. Okay.
So the the PayPal one, we are looking for 50%. The Dell, we are looking for 50%. Palantir, we are looking for 50%. So on that account, that is the 1K to 100K challenge account. And on that account, when we get in and we hit 50%, we sell. Then we wait for another trade and we go in, right? It's supposed to be like one trade at a time. But last week, I ended up doing three and then I added one. Palantir, I took profit on that and left two runners. So I don't even consider that. It's still going, but it's almost like there's no risk involved because it already went up past the 50%, right? So once you take the profit, you whatever you leave. So let's say we have 8 contracts and you sell 6 and you leave 2. You basically just play with house money at that point because there's your principal that you put up is no longer at play. You already took it out, and now you have a little bit of the profits to see if you can make more money with the profits. Does that make sense? So you can take
Makes sense.
profits and keep on playing the game, and that way all your capital is not tied in. So you
Yeah.
take profit and now you're using some of the profits to go into the next play. And then once you make money, you take some profit. You can take everything off the table. So like with PLTR, Palantir, we could have, this is 5 minutes. Okay. So we could have sold it all, could have sold everything, but I felt like it had more room to go. So we got in here, and it was based on this. It was based on right here. I got in right here. And again, remember, this is why I'm trying to explain the level. So once you see me get into something, even if I don't explain why I got in, you can literally look at the chart and you should be able to know why I got in because I trade my system is very simple. It's not complicated at all. I don't use indicators much, right? It's just based on price action. So again, like right here. So let me show you something. Here, this is somebody got their mic on. Please mute. So look, so right here, right? So this is your demand zone. This is where you want to buy from. This is your support level. And so pay attention to the choices of words I'm using, the levels, the zone, meaning it's not a fixed price, right? So if you are trying to buy, you want to buy in this area. It's not necessarily 23.85 or 23.73 or 23.50. It's a zone. So anywhere within this vicinity, anywhere here is a good or was a good area to buy, because this is what happened. This level used to be a resistance level, right? It was resistance. It was resistance because the market was finding it difficult to break through it. And then it looked like it broke, but it was a fake out, right? It broke it, but it couldn't stay on top of it. It came back down, right? Cool. Cool. Oh, stay. And then eventually it broke through it comfortably. Boom. Then it went all the way, right? At this point, we're not chasing it. If you saw it here or here, you're not going to be like, oh, Palantir is going 24. Should I buy? Oh, 20. We don't care. Let it go. Let it go. Let it go. Let it go. It went up, right? But we know what goes up must come down. What goes up will come down at some point. So when it did come down, now we are watching this level again. Because when resistance breaks, it turns into support. So now we have our zone of interest. We've already drawn our rectangular area, right? And we like, if price ever comes down to this level, we want to get in if we find a good price action signal in the form of a candlestick to enter. Am I making sense? Like in my mind, I'm spitting so much fucking game, but I don't know if it's translated in your brains. But in my mind, I want to clap for myself. Damn, that shit good. But I don't know if it's coming out the right way. Is it coming out the right way?
I
Let
got
me know.
this. I
Oh, you
think
got
it's
it?
clear. Yeah.
Oh, okay. So what is the candlestick? What is the candlestick that gave the confirmation? Somebody has their mic on. Please mute it if you're not talking. It was this one here. This one, this green one. Y'all see this? It's a bullish engulfing candlestick, but it's more powerful when it forms at support. So bullish engulfing doesn't mean much if it's just in the air somewhere floating in space. It doesn't matter. Nobody cares about it. We only care about it if it forms at the right place. And what is the right
Layman's
place?
term. Layman's terms. What is bullish?
Okay, I'm going to explain. So bullish engulfing, meaning this candlestick here, this one. You see the one that I'm moving my cursor on? This. It engulfs this candle.
Bullish means up, bearish means down. It's kind of easy to think of it like that.
Say it one more time. I'm gonna write it down my notes. Say that one more time.
Bullish means up, bearish means down.
Thank you.
You got it.
Oh, I guess that's what you meant. Okay. Yeah, so bullish bulls buying, you buying, right? Bullish means it's likely to go up. Bearish means it's going down. And it's based on the fighting styles of bulls and bears. Bears tend to fight down, you know, fighting down. Bulls, you know, so whatever. Bulls, you're bullish means you optimistic that the price is gonna go up. If you bearish, you optimistic that the price is going down, right? Or you are pessimistic about the market. Same difference. So this candle here is called a bullish engulfing candle, right? And it's a reversal candle, meaning when it forms at the bottom of a downward move like this. This was a downward move. So if you find it at the bottom of a support zone, it's likely to push the price up. And it did just that. So you need to have a bias before it even forms. You don't want to wait it to form and try to convince yourself that I'm gonna go in, right? So let me give you an example. So let's play this. We're gonna play this. We're gonna play this. Replay. I'm gonna move it here. Excuse me. Okay, so you see, so that the candle, let me remove all of this. It will make it make sense. Delete, 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 delete. Okay, so in real time, right? In real time, this is what you will do if you're trading. And this shit is $18 trillion worth of game right here. I'm actually gonna do like a master class in a few months. I'm gonna charge like $5,000 for this. Cause this shit is so dope. Once you get it, you'll be like, okay. So in real time, this is a resistance zone. Do we agree? Let me
Yeah,
know.
we agree.
Okay,
Yeah,
so
we
it's a
agree.
resistance zone.
Yeah.
Okay, good. Which means market goes up, it's finding it hard for it to break. Okay, so let's play it. So this is what you want to do. You want to establish your zone first. So let's play. So we are playing. Now we're not doing anything. We're not buying, we're not selling, we're not buying puts, we're not buying calls because it's just in the air, right? So it was going, it's going. Now we're not doing anything. We're not doing anything. We're not doing anything, right? Because look, it tried to break our resistance zone here. It couldn't. Try to break it again. It couldn't. So that's giving you more confirmation that this is indeed a resistance zone, right? It's an indeed resistance zone because it's finding it hard to break this area. And it's an area, again, it's not a fixed price. It's not like 24, 23. It's anywhere from here, it couldn't go up. And this is a 75-minute chart, meaning it's an hour and 15 minutes, right? It's a little odd. But let's see. So if you're trading, you're not doing anything. You're not buying, you're not selling, you're just watching because it's not in your zone yet. It's not in your zone. Here, you missed it, right? Because you wouldn't have gotten in here on a buy because you would be buying into resistance, and you don't want to buy into resistance, right? So ideally, the best thing to do is to wait for a pullback, a correction. So you want the market to find the next resistance, and then you only want to buy when it comes back down here. That is the way you trade. So if you miss this move on the way up, don't worry about it. That wasn't your goal in the first place. You're not trying to chase it. Even if it's going to 30, let it go. Because what goes up will come down. So let's watch.
Well, Block, let me ask you a question though.
Yes.
But if it's already up, can you just make money off it going down?
Yeah. Absolutely.
But where would
Absolutely.
you but where would you do it? Like how you show at the point when it
I'm
goes up, don't buy it from there. So when
I'm
it
going to show
goes,
you.
okay, I'm sorry, thanks.
Yeah, I'm going to show you. So let's watch the replay. I personally don't do it because my brain is a little fucked up. I'm too optimistic to do pessimistic stuff. And for me, like shorting the market is like, going against the way I'm wired. But that's just me. Don't listen to me when it comes to that. Just know that you can make money in both ways. So, and I'll show you. So let's say it's going. So at this point, right? At this point, you can start becoming bearish. You can start to buy puts at this level. And you're going to ask, how did you know? Why would you say, like, how high do you think it's going to go? I know because if I'm looking at the RSI here is an indicator that basically guides you to see when the price of the market is either overbought or oversold. So the RSI ranges from 0 to 100. 0 is the floor, 100 is the top, right? It doesn't go below 0, it doesn't go above 100. So the 0 is the lowest, 100 is the peak. Anything above 70 is considered overbought. Anything below 30 is considered oversold. So if you see the RSI here go above 70 and it starts turning green, it means that the price is a little overextended, which means a pullback is around the corner. A pullback is due. It doesn't mean the moment you see it, it's gonna turn. It's just guiding you that, hey, the market has been going up for quite a long time. And in due time, people are gonna start taking profits and it's gonna drop. So when you get in, you're not expecting it to turn around the next day or 20 minutes. I think a lot of people get into trades and they expect to see some profits in 20 minutes or 30 minutes, or if 2 days goes by and it drops, let's say they buy and it drops, it's like, oh, it's dropping. Well, the market ain't gonna dance to the beat of your drums. The market is doing what it's doing. Sometimes it may continue to go up before it turns around. So in this case, let's say I see this. I'm like, I'm gonna sell. I'm gonna sell, right? So let me sell 100. I'm gonna sell 100 shares of Palantir at this level based on the price action and the RSI. So let me sell. So I sold. Okay, let's go. So you see, I'm making money now. Can y'all see my screen? So I'm making money. I made $52. I bought 100 shares of Palantir at this level. You with me? You can see. I'm gonna put my take profit down here. Hold on. Hold on. Can y'all see? I'm gonna take my take profit here. So basically, if it hits my take profit at 23 something, I'll make $263. And then my stop loss, I'm gonna take it to right here. Okay, so let's see. Boom, boom, boom. I made $271. Y'all see that? And this is not options, by the way. This is not options. This is you bought the shares. Man, y'all not being, y'all not. You picking up the game or what? Come on.
Hey, Brock, I'd like to thank you for clearing that up because, boy, I read charts too, but I don't, I do my resistance and support levels is what you call them, guys. Like basically what he's teaching is when the market go up, when it's going up to that level and it gets to that level and try to break through the roof by going up, that's a resistance level. And those are the levels where the market rejects them, where you get a lot of rejections and it forces the market to go down. And the other level is support level, and those were the areas where the market tried to push through and it rejects it and push the market up. On a lot of the resistance levels, that's where you take sales, and at the support levels, that's where you take buys. But I want to thank you for clearing it up because I be reading charts, but I only mark off my weekly and my daily resistance and support levels. And sometimes when I be saying you calling out plays, I be looking at the charts and I be like, damn, where he get that from? Now it makes sense because you on a higher time frame. So yeah, I
Yeah,
like that. And
absolutely. And
guy and guys, the reason why he doing it from the higher time frame because the higher time frames hold more momentum. So when it get to these levels, you're gonna get a good rejection or you're gonna get some good momentum from these levels, and that's how you make the money.
Is the timeline is a month though, right? We're doing it off a month chart.
Now I think
no,
he started from the 8 month.
yeah, I
Oh,
start.
8 months, and it
And
works its way.
yeah, you don't have to because the 8 month is kind of like it's a weird chart to begin with. That's like a customized chart that I added. It's not a default because typically you have a 12-month, 6 month, 3 months, 1 month, and then you have 1 week, 1 day, 4 hours, 1 hour, 45 minutes, 30 minutes, 15. Those are the basic ones. But I've just created my own just to see if I can get a little edge in the market. So I can see a different perspective that most people are not looking at. Because you have to understand, most traders are looking at the same time frames, right? So I need an edge. And if you want an edge, you have to find something that nobody is doing, right? So the 8 months, 7 months, 5 months, it's not typical, right? So, but if you're a swing trader, you don't need to start from 8 months. You can start from 1 week, right? 1 week is good enough. So like right now, you see it went up here. Typically, I wouldn't do a put, right? I wouldn't do a put because of me, but you could have used the information to buy a put and you would have made money. Me, I'll rather wait for the correction and then buy because I'm bullish. I'm bullish biased, right? I see the market from a bull's eye, from a bull's perspective, right? I want to buy low buy here and sell here, buy here, sell here. I'm not trying to bet against the market because the market is designed to go up, right? It's designed to go up. It's making higher lows. So this here, when I say a higher low, that is how you determine if a market is trending up. So this point down here, right? This point here.
Of course. Can you grab it? What? What to make it? That's what to make it for the
brush, highlight, brush. Okay, so let's do this. So you see this level here is a low. This level here
like a bluer light, yeah? More so like a
is
yellow.
low. This level here is a low. This level here is a low. Do we see that? Does that make sense?
Yeah, I see what you talking about. The high and low meaning like when it goes. Yeah, I see it.
what?
Wonder.
Yeah.
We got
Who
a
has
hot
their
mic.
mic?
Yeah, somebody has their mic on.
Okay, so that helps you to determine when I say the market is trending up, because you'll be like, how do you know? You know that based on the lows, right? So the market is doing this. So even though it's coming down, right? Wherever it's bouncing from, like this was a low. This level here was a low. So when the market went up, it made a correction. And this was also a bull flag. So if you're trading flag patterns, this was also a trade on its own. But we're not even going to go into that right now. I'll be here all day. But you could have bought from down here and rolled it to the resistance and took profit, right? Then it corrected itself. But look at the next low. So the next low was higher than the previous low. And the previous low was higher than the previous low. So it shows you that the market is trending up because the pullbacks are getting, where the market is bouncing from is getting higher and higher. Does that make sense? Look. And then the highs are also getting higher and higher. So this high was higher than this previous high. This high is higher than this previous high. So if this is supposed to work out, it should make a higher high, higher than the previous high. And then it may come down here, right? But it will probably reject here because right here, man, this is so much good game. I want to clap for myself. Y'all better clap for me before I start clapping for myself and y'all think I'm crazy. So like right here, right? And that's just the way markets move. The same way cats meow and dogs bark, that's the way markets move. It's really that simple. And this is why you can trade without indicators and you'll be fine once you understand price action. So now we've made $271, right? But this is my go-to. This is where I want to make a move, buy from here, right? But your question was, I forgot your question, but this is a bullish engulfing bar because this candlestick here, it formed at support, a demand zone. It formed within our purple haze, purple space. I've been listening to too much Dipset. So this candle here engulfed this candle, and this candle. When I say engulf, it means this is the mother. She got kids. You said layman's term, so I'm gonna break it down. So this is the mother, and these are her kids. 1 baby, 2 babies, 3 babies. Because look, they are all in her belly. Look, this is the head of the mother, 2420. That's the tip of that candle. This is the bottom of that candle, 2329. And all these 3 candles are within the top and the bottom of this candle. Does that make sense before I lose anybody?
Crystal.
Crystal clear? Okay. So the reason why I got into this was I was already waiting for it. It wasn't something I seen and I'm like, "Ugh." It was something that I waited on. Like, come to me, tell me you're ready, right? The market is like when you trying to holler at a woman or something, right? You don't want to be aggressive. Let her tell you I'm ready. Let's go on a date, right? Because you don't want to end up in jail for trying to get the wrong signal. You're like, yeah, I thought she was feeling me, and you try to kiss her, and then she smack you in the face like, dude, I wasn't even feeling you. So the market, same thing. Let her come to you. Let her tell you I'm ready. Let's go for a dance. And this is what it is. You see a bullish engulfing bar at support with the babies. Your entry is really when the top of this candlestick breaks, is go time, right? But there are different ways to enter it. You can be a little aggressive, right? And enter early, or you can wait for the top to break. Your exit, where you get out, is if the bottom of this bullish engulfing bar, which is the green candle, if that bottom breaks, that's your stop loss. So you will say, okay, if Palantir goes down below 23.25, I'm out. And that is the risk. There's risk involved in every trade. No trade is guaranteed, right? Because it's a game of probability, and we're just playing to see if we're gonna win or if we're gonna lose. Okay, so let's say I seen this, I'm like, okay, I did a put, I made $270 or whatever. I'm gonna buy Palantir, but this time I'm gonna buy a 500 shares. So I'm gonna buy, let's go. So now I bought it. So I bought it, right? But hold on. Let me pause. So I bought here. My stop loss is gonna be down here. Let's say 22.99. So do you see that it's showing me that if I lose, I'm gonna lose $537. Does everybody see this? Give me a second. I'm about to kill these kids. Hey, if you don't shut up. Making all that goddamn noise. You know, we learning how to make money here. Okay, y'all didn't hear me. Don't call CPS on me.
Oh my
Okay,
God.
does everybody get it?
Yeah.
Okay, so I'll stop. We've already established. So this is the risk that everybody should understand, right? If it's a contract that you are in, if your stop loss is at minus 50% and your contract costs $500, your risk is if you lose, you're going to lose $250. And you have to accept it before you get into the trade. If you don't accept it, you're just fooling around, right? So in this, let's say this was a trade, my risk will be minus $537 if it goes against me, if it dips down below that candlestick, right? And then my take profit is gonna be up here, I'll say right here. So if my take profit hits, I'm gonna make about $1,600. And this is where you get your risk reward from, right? Your risk reward, you always need at least a 2-to-1 risk reward, meaning if I'm risking $537, there has to be enough room for me to make at least twice that. So if I'm risking $500, I should be looking to make at least $1,000. If I'm risking 1,000, I should be looking to make at least 2,000, and so on and so forth, right? But that is not just based on an arbitrary thing, that you just say, oh, because sometimes there's no room for you to make 2-to-1. And once you see that there's no room for you to make 2 times what you're risking, the trade is not worth taking. But because there's room here, I see the previous high was a 26, right? So I feel like it's likely going to make its way over there. So if I'm risking 537, I'm looking to make at least $1,100-$1,200. So let's see how that played out. So now we up, it came down, it looks like it was going up, we made money, 700-800, and it's down. Congratulations, 100% winning rate. I'm the best fucking trader. You see what I'm saying? Man, come on, man. You gotta love this game. You see that 100% win rate. Somebody got their mic on, please. Don't you love it? And we haven't even gone up here, right? We haven't made it up here. We already made $1,000 profit. So for me, I only try to buy here, in these demand zones. Or like if this goes up here and it comes back down, I will look to get in back here and ride it back up. Man, tell me that helped. Because this is too much game, man. I want to pay myself right now. God damn, that was good.
It was. Thank you.
Amen? Can the church get an amen?
Well, yeah. Y'all better.
Amen.
Amen. This is, but it's really that simple, right?